I think the shock of all shocks to those who do not believe in Bitcoin or think it's a Ponzi scheme or, are blockchain, not Bitcoin, in their focus. They're shocked that the Bitcoin has gone from 19,000 during the heat of the bank crisis in that second week of March to 29,000. It's a flight to safety.
Cathie Wood, the esteemed CEO and CIO of ARK Invest, provides her valuable insights regarding the current banking crisis. Wood asserts that Bitcoin holds immense potential for substantial price surges amidst the ongoing financial turmoil, which has eroded trust in conventional banking systems. Notably, Wood highlights Bitcoin's remarkable attribute of scarcity, emphasizing the finite quantity of units obtainable in the market through mining. As the demand for Bitcoin continues to soar, this limited supply dynamic could pave the way for a noteworthy price upswing. The Federal Reserve has recently implemented its 10th consecutive rate hike, commencing from March 2022. This decision has propelled the federal funds rate to an elevated range of 5% to 5.25%, marking its highest level since 2007. These developments indicate a positive trajectory in the realm of inflation. However, it is evident that the Federal Reserve still has important work ahead to accomplish its goals. Cathie Wood shares her perspective on the Federal Reserve's approach, noting that it relies on lagging indicators and lacks representation from individuals with market experience. As an expert in the field, Wood suggests that this approach may hinder the Fed's ability to effectively navigate the ever-changing dynamics of the market. Don't forget to subscribe to the channel and hit the bell icon for latest news.
The Fed did increase the Fed funds rate again, 25 basis points. We're now at 5.25, 21 times where we were a little more than a year ago. So a 21-fold increase in interest rates from 25 basis points to 5.25. Now, never has the Fed raised rates in the middle of a crisis. And they do seem still to be separating or compartmentalizing what's going on. We have the tools to deal with a crisis, and we're doing that. And we need to fight inflation as right now a primary goal of monetary policy. We've never seen a swing in money supply like this one. We've gone from 27% increase in February of 21 to now minus 4.1%. So that's a 31 percentage point turnaround. And one of the things that puzzles us is that the Fed is not talking about money supply. If you think about the Fed, the makeup of the Fed, I don't think any one of them has been involved in the financial markets. Neil Kashkari at the Minneapolis Fed was at Goldman for a while and PIMCO for a while. But the way I understood his roles, he was more of a relationship builder. I don't think he was watching market signals as far as a day-to-day job. So I understand that they probably don't respect market signals the way we in the market think they should respect them, but they should respect economic signals.
Cathie Wood posted a tweet. Crypto did not force SVB and Signature into bankruptcy. In my view, Fed policy was the primary culprit. Because of a VC funding drought and higher yields on money market funds, deposits left the U.S. banking system. According to Cathie Wood, banks are likely to witness a transition from net interest margins to net interest losses. This shift will have a direct impact on their earnings, resulting in a gradual decline over time.
Look at what people are doing with their money as they leave banks. They're going into Treasury securities for the most part and money market funds, safety. And it is interesting that they think they're lowering their risk by leaving the banking system and increasing their returns by going into Treasuries. That's not the way the world is supposed to work. You usually increase your returns as you're increasing risk. So the incentive to do it, given the bank failures that seem to be occurring regularly nowadays. The sensible thing to do is to go for the higher return and the lower risk. Now, what I mean by crowding out is, and this was really a concept that came out of the 70s and early 80s. Henry Kaufman and Al Wojchnauer were the two economists who really focused investors on this thought that the government was, from a funding point of view, taking away opportunities from the private sector. And that is what's going on. Why is that? It's going on this time because deposits in a banking system can be turned around into making loans. But funds flowing into money market funds backed by the government, treasury securities, those can't do anything. They can't be repurposed. And so that's what I mean by crowding out.
Cathie Wood highlights a remarkable observation. The current number of Bitcoin units stands at 19 million. Wood points out that the recent surge of Bitcoin's value, skyrocketing from $19,000 to nearly $29,000 within a short span of a few weeks, serves as compelling evidence of its perceived status as a reliable store of value. Additionally, Wood emphasizes the unwavering commitment of the developers, coders, and programmers who have established Bitcoin's foundational principles, ensuring its stability and resistance to alteration. Based on data analysis, the price of gold reaches new peaks as traders closely monitor the ongoing U.S. banking crisis. In parallel, silver demonstrates a strong rally, driven by the gold/silver ratio approaching multi-month lows, attracting the attention of traders.
And if you look at our Bitcoin monthly, it just came out this week, a couple of days ago, you'll see that the signals, we measure the health of the Bitcoin blockchain in that piece. And you can see the health on a day-to-day basis, and it's very, very healthy. And then there's another market indicator. It's away from fixed income and digital assets. It's commodity prices. All of the prices I usually cite are down from their peaks, and all but gold and silver are down on a year-over-year basis. And we're watching gold very carefully. It, like Bitcoin, and to some extent silver as well, are flights to safety if people don't trust the banking system. But we also have to be mindful that gold is a very good inflation gauge. It peaked in August of 2020, and it's still in the range that has been in place since then. But we're paying close attention. Is it rising? Is the price rising because of a flight to safety? We would suggest so. But there's always that risk that gold is picking up on fears also that the Fed, those who don't believe the Fed should ease, and we're not in that category, but there are many people out there and who worry that the Fed will pivot, might be hedging that possibility with gold.
Cathie Wood draws a conclusion regarding the existing challenges confronted by banks in the United States, reinforcing her conviction that these circumstances will entice a growing number of investors towards the Bitcoin market. Wood firmly believes that investors will be compelled by the inherent qualities in this digital currency, particularly its capacity to serve as a reliable store of value. We invite you to share your thoughts in the comments section. If you found this content valuable, please give it a thumbs up and subscribe to our channel for the latest news and videos. Thank you for watching.